Good evening, this is Nick Inman from VolumeProfileTrader.com on Saturday, January 14th, and I'm going to go through a handful of stocks today, a lot that we've been involved with, and names that continue to work are what we're focusing on, and names that aren't, we're just going to cover, saying basically that you should no longer be involved in those names because, well, they're no longer working. So it's pretty straightforward, and I think this video should help, and it should give a direction on what I think about the market in depth and in detail, because there's a decent amount to talk about. So, looking at the S&P, gonna zoom in here. Everything's still working. However, I've been saying once this trend line breaks, I'm gonna be a little worried. I'm going to look to sell. Well, guess what? Being that it was Friday, I took some profits in a lot of things. And basically, in a way to where my cash level, and my thought process behind this was, if the market gaps open Tuesday morning lower than what it did, basically where it closed on Friday, would I be happier holding cash or a boatload of stocks that I could buy at cheaper prices? And looking at what's gone on, we've seen a series of higher lows and higher highs. Not saying this is long in the tooth, because it may or may not be. It's hard to tell for now. But considering it was Friday, considering it was a 3-day weekend, it just looked poised for some type of pullback. So Friday we got a little bit of that, but then it rallied into the close. What I think it was more so a little bit of speculation buying into the close, or I should say, pushing the market back towards the highs of the day, closing at 1289.50. That's pretty impressive. But what I think it was a lot of people trying to short this market, and they basically got squeezed into the end of the day. So I think there is, you should be long, you should be net long, but you also should be looking to protect your profits, and I think that's what Friday was all about. I think what we're looking for is looking at this general. I'm actually going to choose to go on an hour chart, and I'm not necessarily interested in gold, however we will cover that. What I'm interested in the S&P is, you can see the trend line that was broken. We basically went back, tested it. Whether that leads to a lower high, it's really irrelevant. What I'm looking for is for the bottom of the range to hold, and the bottom of the range is around 1272, or the high volume area low from 2 weeks ago. So as long as that holds, then I think you're looking to stay long this market with a neutral bias. If it pulls back even more to 1255, which is the point of control for December, I think that does matter, then that's probably where you really want to get involved in this market from the long side. Until then, it's kind of a wait and hold approach. You stick with what's working, and really from there you can't do any wrong. So as long as your portfolio continues to move higher, then you're in the right stocks, and you want to continue to be in those stocks. Whether you want to add on or take some profits to those positions is up to you. I can say one thing, a few names which I'll cover. I added to this on Friday, and a few I completely flattened because they weren't acting the way that I thought they would. So looking at the S&Ps, it still works. Remember, we got a downgrade from a handful of European countries from S&P, basically saying that their debt's not as good as it's been projected, so they deserve a downgrade. Whether the market shrugs that off or not, we'll find out next week. I think it's going to have some impact, but what I'm more interested in is what the market reaction is after the initial, sell-off, which I assume will happen. So NASDAQ continues to work, similar picture. pullback, I mean, this is stronger than the S&P, but a pullback to 2320 is where you want to look to get involved in this market. If it stays above Friday's intraday low, then there's nothing wrong to say about the Nasdaq. So, and the Dow, this is a little more constructive, as in what we're looking at. We see the floor, it's clear. It's been the past 2 weeks, and really the highs, let's call it this week's value area as the high, which was 2 weeks ago. That was the high there, and then it's the value area of this week. So 12,400, let's call it. That's your selling, that's where you want to look for sellers. Let's look at the VIX, the volatility index. You can see I've had a bunch of lines. None of them have really mattered at the end of the day. I'm looking at 2350 or so on the upside, and only because we had some support back more than a month ago at those levels. Now it then became resistance. We're still at the bottom end of the range. I think this is a wait and hold. It's not a bad thing to buy protection here, but so long as the market keeps trickling higher, the volatility index is going to continue its route lower. And the reason why is because not necessarily the fear factor, but the fact that the movement of the market has been much smaller than what it was a couple of months ago. So the volatility index is just confirming that, and it continues to show not necessarily the complacency in the market, but just the fact that people are expecting smaller moves and they're pressing on the VIX. So that's just a little something to look out for. As far as oil goes, looking at this, let's see, what is a 30-day chart of oil, we're bouncing off the value area low from those levels. I think that this is something that you want to still be involved in. I'm going to bring up a bigger chart of this just so you can see, and not necessarily the S&P. Though, just one note on the S&P. Let me zoom out once more. We are bouncing off of the value area. No, that's not it. Sorry. We are bouncing off the point of control for the month of January. That does matter, and the reason why is because you can put your stop right below there and say, hey, we're in an uptrend, so long as Friday's intraday low doesn't get pierced, basically below 1270, below the point of control for the month of January. This should be an okay to the long side. Now back to oil. You can see that we've been in consolidation for the last couple of months. January's point of control is above us. December's point of control is above us. November's point of control is current support. You can also say it's December's value area low. I think that matters. I think these lows that we're looking at here on oil, I think we're printing some type of base, and give it some time, but this could be a trading opportunity alongside on oil. Gold, I continue to like. We got our pullback that we've been waiting for, but on any weakness, wouldn't you want to be a buyer of gold, considering the point of control for January, December, and the last 180 days are all below us? I do. I think gold's a buy on weakness. Silver, similar picture. I think any pullback more towards 29 is a buying opportunity. We're not too far from those levels given how volatile silver is. But what I see is ultimately this entire level from, call it 28.50. Anything below that is complete rejection by the buyers. This is a classic bottoming pattern, and we're looking for higher prices on silver as well as gold and other commodities. Let's look at the euro, and I'm just going to stick in this 180 day time frame, 1 hour. Euro, it's at the bottom of the range for January, and it printed new lows on Friday. I don't think that's anything to be surprised about. We bounced, we rallied, and then we completely failed off of the value area high, failed off January's point of control, had no support there, so it warranted more selling, and the euro remains a sell on weakness until we get some type of bullish formation on the charts. Really, we know the fundamentals, and perhaps they come out and say something that has a long term, as in 6 months to 1 year view on the euro, but I doubt it. Overall, for now, any rally in the euros to be sold into. And we'll just look at the other partner of the euro. The dollar bounced off December's point of control like a champ and has continued higher. Oh, I would be interested to see what the dollar does around 81.50, 30 cents from where it closed on Friday. I have a feeling though, just because the S&P, what they announced after the close, the dollar, the euro, the markets, they won't be at the same price where they opened or where they closed on Friday. So I think that's just something to be aware of. Okay, jumping into some technology. I think Amazon is in the bottoming process. What I really like about Amazon, and I'm going to bring it up on the daily chart, is the fact that we're holding the point of control, I'm sorry, not the point of control, the value area low for the last year. And until that changes, I think Amazon is a buy-in between the 170 and 180 range. I think it's something that you can scale into with eventually a test of 205 or so on the upside. So realize that we are in a downtrend on Amazon short term being the last couple of months. But we're looking for some type of bottoming pattern at the value area low, looking for a move up to 195 or so, and ultimately around 205, 200. So I think Amazon looks good. Alright, Apple. Apple's a name. They're coming out with earnings sorry about that. They're coming out with earnings not this week, but next week, and it's just something to be aware of. The trend is definitely higher in Apple. You can see the whole moving average literally pointing straight up. We're holding this nice, we're holding 318, which we're forming some high volume at this level, so that's great. As long as we hold 418 or so, Apple remains a hold. If we get below that, I would be looking to buy Apple around 410. If we get it to 400, I would be all over it, and I think that's something to be aware of. So I think Apple is a hold, it's a buy on weakness, and it's a sell at higher prices. EMC, continue to ride this until this trend line breaks. If it breaks, then look for some type of lower prices, but really looking for 25 or so on the upside. I think EMC continues to work despite the fact it was down 1% on Friday. Cirrus, we covered this breakout, and this is something that hopefully, if you've been following my videos, you're long. I would look for some selling pressure around 220 on Cirrus. But you can see the high volume breakout. That's great news. We expect to see higher prices. The biggest volume is below us, and that's positive. That's a bullish scenario. It kind of looks like Cirrus Logic, where we had a long period of consolidation, lowest volume below us, got a huge breakout, took some profits around the 21 area, a little below that, and looking for some type of pullback and waiting to see what it does on the pullback. For now, it's a do nothing. You should have taken profits on Cirrus 2 days ago. So hopefully you did, and hopefully you're looking for a little more downside to to get involved. Google, we're close. Earnings are soon, and it's something to be aware of. We have run up from below 500 to nearly 700, so that's a fairly decent move. We're in a big high volume patch, so there's not a lot to do right now except for wait for some type of action to be needed. We're bouncing off the 50-day moving average right now. Wait for some type of move. There will be an opportunity on Google, probably to the long side, but given how volatile and how sloppy this chart is, I would wait to let it play out if this is something you want to be a part of. All right, going into some other names. Ford bouncing up against the 200-day. Every dip has been a buying opportunity. I would love to see sub 1150 on Ford only as a buying opportunity, and I think Ford goes higher. I think we see $15 at some point this year. Walgreens, weak, and I bought some sometime this week, one day, and I'm a little underwater on it. Not a big deal because it's a pretty small position. However, I think this is something that you want to watch and you want to be aware of. It is at the bottom of the range, and we want to see this hammer out a base between 32.50 and 34.50 with expectations of a move up to 37. So give this time, but realize that we are at the bottom of the range. If we get some type of positive close this week, as long as it holds 32.50, this should be a name that you should keep on your radar. Stericycle. I know I've covered this back when it was in the 78, 76 range. We're now at 84. Unfortunately, I'm not long this name because I kind of lost interest in it. But you can see we held the value area low, generally speaking, and we broke up above the 79 area, which was the point of control for the year. Now we're facing this high volume area and the 200-day moving average. I would look to be a buyer on any weakness around $80, $4 pullback, not too bad, with expectations of mid-80s. So Stericycle looks pretty good. Potash. I was debating covering this on Thursday, and then I shied away from it for whatever reason, whether it be the chart setup or the fact that I felt like I missed this bottom and I didn't want to chase it. Well, guess what? It didn't care. It's up 3%, leaving the train without me. I would look for $50 on the upside on potash. That's not too bad of a move on a $45 stock. Agrium continues to go higher. If I had to buy Agrium or potash, it would be potash just because it has more potential to the upside I see. We're running into the 200-day and the value area low on Agrium, and I think that's just something to be aware of. Monsanto, I took profits. 3/4 of my position of Monsanto I took on Friday. Profits off the table. That's enjoying the run that it's had, and I would look to be a buyer around 75 on Monsanto. That's not a huge pullback, but it is a pullback, and it's something that you want to be a part of. So Monsanto looks good. Terra Nitrogen, we caught this 159 breakout. It's broke this trend line, which it wasn't even a trend line. We basically are trading between value area high and 170 or so. I would keep an eye on that. The upside bias is definitely there, and it's something that you should be involved in. Take $184.23 plus commissions and buy one share. Volume's light, averages over 100,000 shares when it's volatile. When it's not, it's more like 50. So just be aware of that. Get a good fill, and don't just buy the market because you'll get a poor fill. But I like the fact that Terra Nitrogen is looking good. Plus it has a 15% dividend, may I add. Las Vegas Sands, I think this breaks out to the upside. I think this is something that you want to have a placeholder position in. I am close to a full-size position on Las Vegas Sands from around $42. I enjoy it. I look for more upside. I look for $48 and really a breakout up to $60. And those are my expectations for LVS. When you think LVS, think MGM. Is that moving higher? Yes, it is. Think WIN. Is that moving higher? No, but we're in a bullish wedge pattern, something to be aware of. More upside expected in the casino stocks. Now, Polaris continues to work. We were catching this stock off the 54 level, which was the point of control. It was also trendline support, 200-day moving average. We got a nice higher low, a way to define risk on Friday. And the reason why is if Polaris, PII, falls below, let's see, below 57.61, so we'll call it 57, below 57.50, you can go ahead and sell all your shares if you plan to buy on Tuesday. Just realize this could just be some jitter. It was pretty low volume on Friday. We could get a pullback back down to the trend line. That's where you really want to be focused. But I like the fact that this stock is in the winner's circle. It's up at the top end of the range, and we're holding the point of control for the year. So that's positive. I like that. Kind of reminds me of Celgene when it was back towards $62. Hey, Celgene continues to work. I think it will continue to work. This is a name that we covered back in the $62 range. I hope you're long. I hope you remain long. I've taken profits on about half my position around $67. That was wrong, and we're looking for more upside. So thankfully, still long, but I wish I had more in it. And the last sector I want to cover is coal. Let's say it, down 10%. I did not get this trade right except for 2 days worth. I put out an email saying buy Alpha Natural Resource. It was around $21.40. It had a nice run to the upside. It got as high as, $22.80. So it really did have a decent run. I actually had some options that I thankfully took off near the top end of this range. I just had some shares that I was holding. I got chopped. I sold them immediately at the beginning of the day because that wasn't what I was expecting on Alpha Natural Resource. That's what we got on huge volume. So just confirming, Patriot Coal down 12%. Is this something that you want to be long? No. Walter Energy? No. Arch Coal? No. So stay away from these. We try to call the bottom. Obviously, the bottom's not there yet. This is the point of control in a yearly chart. Do we have to zoom out another year? Well, now we're at the value area low for the last 2 years. Do we have to zoom out another year after that? Oh, we're at the point of control for the last 2 years. So we're at important support for Arch Coal in this example, and I think there's potential for a bottom, but definitely not now. The fact that it was down, these names were down 10% or so in 1 day. So it's just something to be aware of. So anyways, I hope this helps. I hope it gives you some ideas. I still like this market from the long side. Be aware that we are at the top end of the range. We could experience more selling pressure, especially with the catalyst being S&P downgraded a boatload of European countries. So stay long, stay prudent. Take profits if you have them, if you are shaky about this market and you feel that's at the top end of the range. But I still feel like we go and test S&P 1310 to 1325 or so. So stay tuned, and I hope you pick some of these stocks that are working. And my hopes are you can ring the register and enjoy this service.